Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special investing report on Marac Finance. Now we've got some good news from the finance company sector again. Yesterday it was South Canterbury Finance, today it's Marac Finance, and a rare piece of good news. A couple of finance companies reporting increased profits and very strong funding situations. Marac Finance has announced its profit rose 5% in the last year to $26 million or so. That includes provisions for losses of $5.7 million, up from $1 million the previous year. But that's still only 0.42% of its assets. That's sort of bank level type of bad loans compared to total assets. How has Marac Finance managed to do this when other finance companies are in all sorts of trouble? Firstly, diversification. Marac Finance spreads its lending across a bunch of different areas. So commercial buildings, asset finance, farming, consumer finance, and some property lending. But it's not the sort of risky property lending that some of the other finance companies have done, particularly the likes of Queenstown and Taupo. Marac has no loans for residential developments in Queenstown and Taupo, and it doesn't do what's called mezzanine finance. That's where the finance company actually puts some of its own money up into the project and tries to take a profit as well as take interest on the loan they make. Key thing here is that Marac Finance has only made one loan in the property sector this calendar year. Most of its loans are for tenanted commercial buildings or industrial properties. It's also very well funded. It has a $300 million securitization facility with Westpac, and it has a banking syndicate with 5 banks in it, 5 local banks, the big 5, who are willing to lend it $480 million if it needs. Also earlier this year, right in the middle of the finance company meltdown, Marac Finance managed to raise $104 million from a 5-year bond, this from regular mum and dad investors. And it currently has about $537 million that it owes to mums and dads in the debenture market, but this is only a third of its funding, so it's not utterly reliant on mums and dads. Marac is also looking to the future. It's planning a medium-term note facility. This is where it borrows money from various institutional and bank investors in a longer-term wholesale facility. Again, more diversification. And by the way, Marac has $250 million of cash in the bank. So, another good finance company news story after South Canterbury yesterday. I'm Bernard Hickey. That was a special report on Marac Finance.